A number of exchanges and hedge funds are about to be liquidated over the next few weeks. This is going to have a massive impact not only on the crypto market, but also on the stock market as well, and on that AMC squeeze. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Forbes Crypto tweeted saying exclusive after throwing lifelines to troubled digital currency platforms BlockFi and Voyager Digital. Sam, the 30-year-old billionaire founder of FTX, warns that some crypto exchanges and hedge funds will soon fail. The title of this article says Bankman-Fried warns some crypto exchanges and hedge funds are already secretly insolvent. It says the question on everybody's mind in the crypto world and in the stock market is whether we've reached the market bottom. Nearly $2 trillion in crypto market value has evaporated since November. In terms of the stock market, I think that figure is now between $5 to $10 trillion. A number of major crypto companies, exchanges and lending platforms, and also many hedge funds in the stock market have been struggling. Obviously, Bitcoin fell below $20,000 and fell below $20,000 again today, and the stock market seems to have resumed its fall as well. So far, FTX has invested into Voyager Digital, into BlockFi, into Robinhood, and into Three Arrows Capital, and Sam knows full well that his own fortune depends on its healthy rebound and growth. FTX, Coinbase, Kraken and Binance are giants among digital asset exchanges, but outside of these whales there are more than 600 crypto exchanges around the world operating in a largely unregulated frontier. And he said right now there are companies that are basically already too far gone, and he said it's not practical to backstop them for a number of reasons, like a substantial hole in the balance sheet, regulatory issues, or because there's just not much of a business left to be saved. And Bankman-Fried is worried about continued failures because during the euphoria of rising crypto prices, exchanges kept upping the ante to attract customers with generous yields for deposits. BlockFi, Voyager and a number of other companies were promising yields of up to 12% per year, and that had to be paid for by either charging at least that much in interest to borrowers, or more likely, by putting that money to work in decentralized finance DeFi applications. Obviously, one such DeFi application, Celsius, has just paused withdrawals holding around $11.8 billion of investor cash. Now, it's not just lending platforms and exchanges like BlockFi or Voyager that had exposure to Celsius. It's likely that a number of other hedge funds also had similar exposure. Obviously, Three Arrows Capital did have exposure to Celsius, but I'd also bet my bottom dollar that they're not the only fund. I think over the next few weeks, as Bitcoin continues to fall and more DeFi platforms end up exploding, more and more hedge funds are going to end up feeling this wrath. If we do start seeing more failures like BlockFi and like Voyager, we could soon see FTX come crashing down as well and taking out most of the crypto market alongside. And obviously, as more funds are going bankrupt, that's not just going to impact on the crypto market, but also impact on the stock market as well. Recently, Bitcoin has been very heavily correlated to the Nasdaq and to the S&P 500, and that's because many of these funds that are investing into Bitcoin also invest into a number of tech companies. And obviously, when that fund like Three Arrows Capital ends up imploding, not only do they lose all the money that they had invested into crypto and are forced to sell off their crypto assets, but they're also forced to sell off their long tech stocks as well. Also, from Moomoo's latest customer agreement, they officially state they do not benefit from your order flow and don't sell your order flow. They don't sell your order flow to market makers like Citadel or to clearing houses like Apex Clearing. They have their own clearing firm, Futu Incorporated, which does not sell your order flow. And if you sign up to Moomoo right now using the link in the description below, you can currently get a whopping 10 free stocks worth up to a total of $25,000 and a free share of Lucid on top of that. And the block has just reported that the Three Arrows Capital liquidation has just been ordered by a court in the BVI. It says the advisory firm Teneo has been appointed by a BVI court to handle the liquidation of Three Arrows Capital. It says the court order placed Three Arrows Capital into liquidation on June 27th, but so far 3AC haven't responded to comments just yet. It says as a liquidation handler, Teneo's main job is to protect the assets of Three Arrows Capital and understand who its creditors are. Usual Wells has tweeted saying that an asset sale process will take place over the coming days and the coming weeks, and it says it will be planned with potential buyers interested in 3 Arrow's remaining holdings, such as tokens or equity stakes in crypto startups. So therefore, 3 Arrows Capital is going to be selling off its remaining tokens, remaining equity stakes, and remaining long tech stocks as well. But as I said, I don't think it's just going to be 3AC that ends up being hit by this. As 3AC is selling off its remaining Bitcoin and its remaining tokens, it's likely the price of Bitcoin will fall further. And obviously, if Bitcoin falls further, a number of other companies and a number of other funds, like Microstrategy, for example, will end up also being liquidated. And obviously, as more and more hedge funds end up being liquidated, it's only going to cause the stock market to fall further and further, fully into that crash territory. And Zero Hedge has tweeted saying that JP Morgan also expects the market to continue falling, as JP Morgan has just taken the axe to tech. JP Morgan have just cut tons and tons of their price targets on companies like Alphabet or Google, Amazon, Facebook, Netflix, Snapchat, Pinterest, and tons of other companies like eBay, Fiverr, and many others. Cutting targets on a giant scale like this, with pretty much every single tech company experience a price target cut, just shows that JP Morgan do expect the market to continue falling. They know the market collapse isn't over, they know more hedge funds are going to go bankrupt, they know more exchanges are going to fail, and they know the market is going to crash more heavily, causing more and more coming liquidations. And obviously, as this liquidation of 3 Arrows Capital takes place over the next few weeks and more crypto and more Bitcoin is sold off, I do expect the price of Bitcoin and the stock market to fall further. But on top of that, Walter Bloomberg has also tweeted saying that Williams has just said the next Fed meeting will mostly be discussing a 50 basis point hike or a 75 basis point hike. There's also many comments suggesting that a 100 basis point hike is needed, but I do think the majority of the debate will be between a further 75 basis point hike. Again, continuing to raise rates in this manner while the stock market is crashing will only cause the market to crash further. And the Bitcoin account has tweeted an excellent meme of the banks bailing out the government, who are bailing out the banks, who are bailing out the government. Obviously, the government is selling and issuing bonds to these major banks and major hedge funds to generate cash so they can bail out these banks later. And obviously the banks are receiving this bailout money so they can buy more issued bonds from the government. Effectively, it's just a cycle that goes round and round in a circle, creating more debt every single time. And Simon Rhee has also tweeted an excellent graph of US average real income growth. Each time the real income growth bottoms and turns negative, it's because we're seeing a recession and giant inflation. The same thing was seen in the late 1970s, the early 1980s, the early 1990s, the mid-2000s, and also 2008 during the previous recession, and is also happening once again right now in 2022. Every single time this real income growth has turned negative and has bottomed, we've seen a recession. But yet, for some reason, the Fed thinks this time will be different, and this time we'll see a soft landing. So far, we're basically already seeing this negative 3% real income growth, and it wouldn't surprise me if it continues to fall further to negative 4% or even negative 5%. Obviously, I do not think that we will have a soft landing. I do think the market will continue crashing and will likely experience another recession. The final Q1 GDP figures were just announced today as well, with a negative 1.6% reduction in the US GDP. That exceeded the expectation of negative 1.5% reduction, and it won't be long until we start seeing Q2 figures being released as well. And obviously, if again we see negative GDP growth in Q2, then we are officially in a recession. Something interesting I did want to talk about though in relation to AMC and GameStop is the cost to borrow compared to the number of failed to delivers. And you may say, Tom, FTDs don't really mean much, but right now we're seeing the highest level of FTDs, failed to delivers, since back in June. So the first thing we're seeing for AMC is this massive skyrocketing in the cost to borrow fee. Since around mid-May, this has increased from around 1% so far up to a whopping 30%. We're also seeing the number of failed to delivers skyrocketing to over 1 million FTDs in a single day. We did see this for one day back in August of 2021, but before that, the last time we saw fail to deliver numbers this high was back in June and July. I do think it will be interesting to see this FTD number increasing over 2 million and potentially over 3 million in the next few weeks. I do think these hedge funds are massively struggling with this high borrowing fee or high borrowing rate, and also with a sheer number of shorts or sheer number of shares on loan. So far, all of the data is pointing to AMC running up once again. We've got 100% utilization, we've got a new record of shares on loan, a new record of percentage of short interest, we're seeing these giant FTDs once again, and we're seeing a new record in cost to borrow. I think it will be very important over the next few weeks to keep an eye on these FTD numbers until we start seeing them spike and skyrocket over 2 million FTDs once again. I think that will be a telltale sign that these hedge funds are losing control over AMC and are struggling to hold it down. I think when we see these FTDs peaking once again, that's when we'll see the next AMC run-up. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.